What's up guys, it's Jake from Money Talks, and in today's video we're talking about how you can win with credit cards and not get absolutely destroyed by interest payments and inflated spending habits. When I first had the idea to start this channel, I went around and asked pretty much everybody I know, hey, what kind of personal finance videos would be most beneficial to you? And the response I got most was, Jake, make a video about the best credit cards for cash back, points, travel perks. And for most people who answered this way, I looked at them and thought, should you even have a credit card? Now listen, I'm not here to make judgments on what you do with your money. It's yours. But what I will do is tell you what's going to happen if you make the wrong choices with your money. The total credit card debt in the US is over $1 trillion. And the average interest rate on credit cards is between 22 and 28%. So it's safe to say credit card companies are absolutely loving the average person who thinks they should be using credit cards but have absolutely no business doing so. Truthfully, most people should not use credit cards, and most spend way more than they would otherwise without one. In my opinion, credit cards are for people who constantly check their finances and are overly aware of the money in their account, the money they're spending, their payment dates, etc. Because if you're not a financial nerd like me or Caleb Hammer, you will inevitably accrue interest charges, overspend, and be in debt forever.
You are not a credit card person. You're not even close to a credit card person.
You'll see.
You're a credit card person. What?
So please, if you're going to use credit cards, start by organizing and tracking your finances. Use credit cards only as a tool to optimize the financial system you already have in place. And with that being said, I have 5 rules that I personally use regarding credit cards and credit, which I'm going to share with you today. Number 1, no annual fees. Studies show people spend anywhere from 12% to I've seen as high as 30% more when using credit cards. So it's important that you don't have an incentive to spend more than you otherwise would if you didn't have the card. It doesn't matter if I spend $0 or $10,000. I want to pay the same fee. Nothing. And that's because credit cards should be icing on the financial cake. It's not an investment. It's not a business plan. Number 2, pay off your card immediately. I don't care when that payment date is. As soon as that charge posts, pay it off. If you don't have the money in your account to pay off the full balance immediately, guess what? Don't buy it. Number 3, separate your cards based on use, not based on rewards. Credit card users often get caught up in trying to optimize the usage of different cards. This card gets me 3% on dining. This card gets me 4% on hotels, whatever. I keep all my credit cards linked to individual bank accounts that are designated for different types of spending. For example, my groceries credit card is paid for with the money in my groceries bank account. Imagine that. And sometimes I'd get 0.5% more if I use my groceries credit card to buy a burrito. Don't do that. I give up a negligible 0.5% rewards for the sake of simplicity. Your finances can get convoluted fast by chasing pennies that way, and you could quickly start losing track of your spending. I don't think it's worth it. Number 4, your credit limit doesn't matter. If you're paying off your credit card immediately, your credit usage from those cards should be extremely low or 0 at all times. So you never have to worry about it reflecting poorly on your credit score. Also, sure, it might be good to have more funds available to you, but remember, if we don't have the cash to buy something, we're not buying it on credit. If you have $2,000 in the bank and a credit card with a $5,000 spending limit, you still only have $2,000, not 7. And number 5, your credit score doesn't matter that much. Most people open credit cards to build their credit, and I'm not against building your score, but you have to understand that the credit score is not a measure of how well you manage your money. It's a measure of how well you manage debt. And to be honest, it's not even that good of a measurement. Also, most people won't use their score for anything positive other than taking out a mortgage on a home. So there's really no rush to build it up super fast. Don't chase a good credit score by spending money you don't need to and paying ridiculous interest payments. It's not worth it. Thank you for watching, guys. Hopefully you got something out of this video today. And if nothing else, be aware that credit card companies make their money off of people spending more than they have and justifying it by saying they were building their credit score and getting 2% cash back. And if you need help organizing your finances and taking control of your money, DM me on Instagram at MoneyTalksJake. And if you like this content, consider subscribing to the channel. Leave a like, comment if you want, and I will see you in the next one. I'm out.